The Bitcoin daily chart is in this very tight wedge pattern, and it's basically going to be forced outside of the wedge pattern probably within the next week, right? So we can put a trend line right here, and you can see you're basically hammering on it, and then you can even connect from the June low right up underneath. And you are, I mean, it can only go so far before it's going to be forced out of this wedge.
Hey guys, welcome back to the channel. Today we have Gareth Soloway forecasting Bitcoin's next move, as well as his take on the economy. Soloway says to remember that crypto is not an isolated space, so you need to stay informed on what the Fed is doing. Soloway is worried because Bitcoin is still a leg down, and we're going through inflation and recession. Also, there have been uncanny similarities between the crash of the dot-com bubble and Bitcoin today, which, worst case scenario, will lead to a complete washout of the entire crypto space. Let's listen to this interview with Gareth Soloway as he predicts where Bitcoin will go in the next few weeks and how inflation will continue to affect the market. Don't forget to like and subscribe if you enjoy what we do here on this channel. Let's get right into the video.
This year, we're at this point right now where, I'm really talking on the equity side of things where it's, everyone's really getting a little edgy here about what this end of the year is going to look like. And I know we're all waiting for the Fed and all of that type of stuff, but maybe we'll start with you, Gareth. When you look at the charts, when you look at the sentiment, when you look at the macro picture and everything that's going on, what do you see happening potentially the rest of the year in Bitcoin?
Yeah, so I think with Bitcoin, the charts right now, we have a nice little wedge pattern. In fact, I'll bring up my charts here and we can just take a quick look. But basically, and bear with me while I pop them up, but
yeah, no
basically
problem.
I'm in a position where the Bitcoin daily chart is in this very tight wedge pattern, and it's basically going to be forced outside of the wedge pattern probably within the next week, right? So we can put a trend line right here, and you can see you're basically hammering on it, and then you can even connect from the June low right up underneath. And you are, it can only go so far before it's going to be forced out of this wedge. So the question is, well, which way does it break? Part of me is leaning towards, at least per what I'm seeing and calculating, is that we could be due for a short-term kind of squeeze, maybe as high as 22.5 to 25,000, but it doesn't change the fact that we're still inside of a bigger macro pattern, what we refer to as a bear flag, right? So if we put a line here and we drag up that, this is definitely from this move down, or you could use any of these moves down. This is longer term consolidation, which is bearish. So even if we get a short-term squeeze, let's say to 25, it's still within this range. And therefore, I would say by year end, I'd be very surprised if we haven't already taken out the June lows and headed lower.
What would maybe be some good news to really spark that interest again, to get people really more motivated to want to go back in and start trading it and buying it?
So for me, it's regulation. And I know that sounds super counterintuitive.
The opposite of what they wanted, right?
Right.
Yeah.
Everyone's like, keep the government out and everything like that. I'm like, I'm an investor. Bring the government in, because as soon as the government comes in and says, these are the rules, then you know what? Institutions are going to say, okay, we know the rules now. Now we can actually decide if we're going to invest. Inevitably, a certain amount of money is going to come in from the institutional side. But I think that's what's the issue right now, is that you have a lot of people that are very intrigued. I mean, hedge funds around the world are like, I'd really love to get exposure down here at 20 or sub 20,000, but I don't know what the SEC is going to say in the next month or two. And so we just have to sit on the sidelines. So for me, I understand that you don't want the regulatory side, but at the same time, if you're going to hope that Bitcoin goes to 500,000 or even 100,000, you have to get big money in the door. That includes pension funds and all these other players. Then it can really rise. So for me, that would be a turning point. The beauty of it is that I think if that was announced, you'd see an initial dump because people would freak out. And then you got to be strong enough emotionally or with lack of emotion to buy that dip.
You really turned bearish over this last, well, I would say at least a year, but throughout the fall of the crypto crash, if you will. But did that kind of influence you last year?
Yeah, it definitely did. I mean, one of the keys to being a good trader or investor is to read the psychology of the market. And one thing I've become very aware of is that when too many people are bullish, then it's time to be more careful and look bearish. And for sure at that point, it was one of those events where I couldn't believe the insanity going on. It was kind of the same in stocks, right? I mean, you had AMC, you had GameStop, those type of runs going on. And if you look at certain weird things, like there's so many weird comparisons to the dot-com era. Like, for instance, the market cap for crypto had gotten to about 3 trillion. And at the height of the dot-com era, it was 2.9 trillion. If you looked at the Super Bowl, right? The Super Bowl in 2000 was called the dot-com Super Bowl because there were so many dot-com commercials. So eerily similar type of things that basically raise the PR status. You know, it's like PR for crypto. And so what you have is you have this scenario where if there was anyone on the fence that kind of liked crypto but hadn't gotten in yet, that was what coaxed them all in. And I always tell people, like, if you have 10 people in a market, right, just 10, in the beginning, only one person's long. As it goes up, 2, 3, 4, 5, 6, you know, basically at the high of the chart, that last person goes long. And then what you have to remember is you have to say, okay, well, who's going to buy it now? If everyone's already long, if all 10 are long, there's no one left. And we kind of exhausted that because of all the hype. You know, you just remember you just had seen the launch of the Bitcoin futures ETF at that point too. So there was immense hype around that as well. And it's just, I mean, the emotion and craziness was just, I mean, I thought I was going to get tarred and feathered. I mean, it was like that crazy, you know?
I know I asked you really for Bitcoin, but what are your thoughts on equities?
Yeah, so I'm in the camp that we still have another leg down in equities. I agree there's going to be awesome bounces. I mean, bear market bounces are notoriously, they call them rip your face off rallies, right? Because they're just so amazingly violent in terms of the moves up. But everything I have on my charts, and I'm mostly, I mean, that's really what I trade mostly is equities, just because there's more opportunities there. It's telling me we still have downside to go. And I think the market, I have the forecast for the macro divided into 2 sections. So right now we're in the down section waiting for the Fed pivot. The Fed pivot will come. It'll create some sort of rally, like Blake's saying, the dollar should pull back. It's getting closer because I think, honestly, you look at the dollar yen, we know what happened to the British pound and how the Bank of England had to step in. More of these central banks are going to have to step in. At some point, the Fed's going to have to back off a little bit, otherwise risk of global depression. But I think my big concern for the next leg lower, which I do fear could be a hugely more violent move down, after we get that kind of pivot rally, you have a scenario where the Fed is going to, the investors are going to say, okay, we are now in a recession. I think we all agree we're probably headed there. The question is how bad? And investors will look at the economy and say, okay, Federal Reserve, can you please start printing money again? And the Fed's going to look back and say, you know what? We really would like to, but inflation is still elevated above 2%. It's 4%, let's say. And that's going to be a wake-up call, right? The market is not, it's like a kid who's used to getting their way with their parents, and then all of a sudden the parent puts their foot down, and the kid's like, oh my God, what just happened?
As Jerome Powell's attitude during his press conference was very peaceable and said hiking is done, this will mean more money in the system, which is positive for Bitcoin because more money will be able to be invested into it. Soloway believes that the economy will decline into a worsening recession and ultimately the Fed will begin to print money again to compensate. He predicts that this printing will create a domino effect that will lead to an even worse recession. Soloway says that investors need to be aware that there will be a massive reset where the dollar will collapse. So far, all markets, including Bitcoin, have had an expectation that CPI numbers will decrease. But he warns that if the CPI numbers go back up, there will be consequences to the market that will lead to a sharp decline, and sell-offs will continue to increase. What do you guys think about Gareth Soloway's take on the markets? Do you agree that it's a wise time to take a percentage off the table? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.